Hello and welcome back. In today's video, I want to give an update on the state of my Raiz account and how I've been progressing over the last 6 months or so, in addition to answering a few commonly asked questions that I get across social media regarding my investing. As always, if you find this video useful, don't forget to leave it a like and subscribe. But with that said, let's get into it. So to start things off, as of right now, the total account value sits at $274,847 with an overall gain of $103,312 in overall gains. This is not the very, very highest that it has been. I believe around October, late October, we hit a peak of almost $280,000 in the account, but there have been several market events that have kind of somewhat stymied that. Crypto, for instance, has seen a bit of a contraction of Bitcoin sort of going down by about $20,000-$30,000 a coin, as well as a mild contraction in the Australian markets. But with that said, though, I'm still pretty pleased with how things have gone over the last year, with over $20,000 in gains just in this year alone, which is quite a nice bounce back from around April, especially when we had the tariffs being announced in the US and everything, and the market went into significant turmoil. And US markets right now are at an all-time high, and things are tracking relatively well in that regard. With regards to my allocation breakdown, it's roughly as follows. You can see sort of on the screen, roughly 5% Bitcoin, roughly 35% US S&P 500, roughly 35% ASX 200, and roughly 25% in ex-US shares all world. This is basically just for a bit of diversification away from US markets, and it's a relatively simple portfolio, but it works for me. Your strategy might be significantly different depending on your risk tolerances and your overall gains. But for me, I'm happy to sort of have a boring but trundling forward sort of slow and steady wins the race, especially at the amounts that I'm getting to. And as for how much I am investing right now, where is it? I'm doing roughly $50 a day right now. That's sort of a reasonably comfortable level that I've maintained for quite a while. I can do more, probably. Just at the moment, markets are still very, very high, and I'm trying to funnel, or at least continue to funnel, more money into paying down my mortgage quicker, which would free up even more money to invest in coming years once I've done that. But if there were a downturn or something like that, like we had in April, I'd probably ratchet up that investment cadence significantly. But as for right now, $50 a day is still a pretty substantial pace, I think. And one of the questions I get asked a lot is, what are the fees? And as you can see, as of January 1st, the fees on this size of account for the month are roughly $62.38. So you can sort of extrapolate that out over the course of a year. You're looking at around $730, $730. You multiply that by 12. You multiply the $62 by 12 for the amount of months, and that's roughly what you get on this size of account, which is around $275,000. Some people decry the fees. You think it's too much. For me personally, I'm happy to pay the fees, and it's not really that big of a deal. In terms of dividends, I do have dividends coming in soon. I've so far earned over $20,000 in dividends, which of course have been reinvested, with around $2,000 more coming in the next week or so, which should help top things up just a little bit. And I believe that sort of covers most things on the investing sides. And for anyone curious, I've had this account for roughly, it's been about 7 years now since the start. So to give you an idea of sort of the scale, and I sort of started investing seriously around June of 2019, and sort of all the way through COVID, all the way through the events with the commencement of the Ukraine invasion, and continued on. And as you can see at the start, there are a few times where things really dipped down, and it's funny to look back now at the COVID period and see how tiny of a dip it was when it seemed like the world was ending. And even the 2022 drop when the Russian invasion of Ukraine commenced, it seemed like a catastrophic drop at the time, and now it just looks kind of smaller. And sort of the biggest thing is just to think long term and don't get too caught up in the short term drops and all that sort of thing, because the news cycle can make you believe like the world's on fire and everything's going to be doom and gloom, but a lot of time, most days, tomorrow's more, a lot of times going to be the same as yesterday, and companies are still going to be out there trying to make money, trying to grow. That's a constant. So I try not to worry too much about it and just let this grow in the sidelines. But about me, in the past 6 months, I've had a bit of changes. I'm back to working night shift. I'm still working as a driver. Nothing special. I'm not someone who's working in IT making $1 million a year or something like that, or some high-end job. No, I'm just a regular truck driver. So it goes to show that even someone with a relatively normal job, given enough time, given enough discipline, you can save up and put aside sort of a comfortable nest egg. And that's sort of my goal with this, is just continuing growing it. I don't know where the end point's going to be. I'm just going to keep plodding along with it, $50, $100 a day, depending on sort of the environment. I guess the next major milestone will be 300K, and then after that 400, 500, and that's when I guess we'll really start to see the big movements each day of 10K a day on a regular day. But that's all I've got to say. I just want to give you guys a bit of an update. But with that said, again, if you enjoyed the video or found it informative, don't forget to drop it a like. My name is Rich, and I hope you have a good one.